We're going to win so much, you may even get tired of winning. And you'll say, please, please, it's too much winning. We can't take it anymore. Mr. President, it's too much. And I'll say, no, it isn't. We have to keep winning. We have to win more. We're going to win more. We're going to win.
Welcome everybody to the Daily Recap Show, where we talk about stocks and the financial markets. My name is Chase. If you like this video, please subscribe, hit that notification bell as well as the like button, and leave a comment for the algorithm. Let's get into it. This is the daily heat map of the S&P 500, and US stocks closed out a winning week mixed on Friday as Wall Street took stock of the US economy from a lofty record-setting perch ahead of the Federal Reserve's highly anticipated decision on interest rates next week. And while we did have slight gains in the market today, it was driven by the mega caps, with Tesla up 7.3%. We'll talk about why. Apple up 1.76%, roughly the same for Microsoft, and Palantir up 4.30%. Nvidia gained ever so slightly, and we did see some bullish momentum in semiconductors. Micron up 4%, AMD up 1%, AVGO pretty much flat. I think Micron is actually up 20% for the week. Absolutely crazy momentum in this name. Google and Meta were also green, and then everything else was pretty much red. It was really just the major players in each sector, Walmart, Costco, etc., that really spurred on the rally today, and that is why we actually saw most sectors actually fall. You could see XLB, industrials, energy, real estate, they were all down here today, but the S&P 500 was flat, largely because of stuff like utilities, XLY and XLC, but not that great breadth in the market today. And we also did see a bit of risk-off move here in small caps, mid caps. They were the worst performers. But coming off a great week, I think what we really just saw was a tiny bit of profit taking in the market. And we also did get data that wasn't too spectacular. We got the Michigan consumer sentiment, which showed consumer sentiment slipped more than expected in September. And while long run inflation expectations jumped to 3.9% as Americans continue to worry about the effects of tariffs. However, on the back of this data, the markets are now pricing in a 91% chance of a 25 basis point rate cut, about a 50% chance, 50 basis points. So the market definitely telling you that we are certainly going to get rate cuts next week during the FOMC. Some other market news today. Lutnick came out and said that Trump will force drug makers to officially lower their prices. Trump and Lutnick warned companies like Pfizer and Novo Nordisk to commit within weeks to lower prices or face massive tariffs, aiming to save $1 trillion for Medicare, Medicaid, and consumers, respectively. And I'm all for this. I'm all for drug prices going low. And on the back of this, Pfizer fell 3.59%. A lot of the healthcare names actually fell today. But the reason why Pfizer and Moderna also fell was there was reports that US officials are planning to link COVID-19 vaccines to the deaths of 25 children. That's not going to be a good look, and lawsuits will come on the back of that. Ethereum was up 5.51% year on Friday, approaching the 4,700 mark. I think we might see the 5,000 region sometime next week. Arista Networks was down 8% today, after it released their investor day saying they're going to do $10 billion revenue by 2027. That's a 50% increase from the $7 billion done over the trailing 12 months. But the market obviously wanted a little bit more. And this may actually be a great buying opportunity to get the leader in the networking space. Tesla was up 7.19% after an event in Las Vegas introduced new products for its energy storage business and included a bit of a surprise. Its next-gen Megapack 3 energy storage system was introduced, and the company also unveiled the new Mega Block. Tesla's energy business is booming, and that is why the stock was up 7% today. It's been a volatile ride for Tesla shareholders this year. And then another IPO we got today was Gemini, which is a cryptocurrency exchange. It was up 14%, but not before opening at $28 today and then ripping to the $40 mark and then pairing a lot of those gains as the day went on. Nonetheless, we continue to see IPO fever reignite in the market right now. And then for everything we saw today, there was 4,000 decliners, 2,200 advances, terrible market breadth in my opinion. The S&P 500 was largely flat, and we saw outflows in both the Nasdaq 100 and the New York Stock Exchange. We lost the 5-day moving average due to poor market breadth. However, the 20-day, 50, 100, 150, and 200-day continue to remain robust. Now, looking at the last 5 days and some of our major indices, Ethereum was up 7.9% today. It actually is the best performer. And if you actually go to our year-to-date charts, it is the best performer year-to-date, when at one point in April, it was the worst performer by a wide margin. So very interesting to see Ethereum continue to move to the upside. Chinese stocks were up 5% this week. Bitcoin was up 4.6% this week. Bitcoin bros really celebrating. And then we also had US equities up 1.8 and 1.59%, notching new all-time highs. European stocks were up, gold was up, and then we saw a mild rally in small caps, and then mid caps actually fell this week. Very interesting trade, but well off their lows, as you can see here on Wednesday. Now, on the year-to-date charts, you can see that every single sector has gained. Now mild underperformance relative to the S&P 500 in mid caps and small caps. I do think they catch up though. When you do look at stuff like the S&P 500 double-digit return, Nasdaq double-digit return, IBIT, Bitcoin 25% return, European stocks, gold and Chinese stocks up in excess, nearing 40% for the year, and then Ethereum, the best performer, just shy of 40% gain. So we've seen a solid rally through and through in the market this week. And these stats are absolutely crazy on a year-to-date basis, considering what we got here with the tariff tantrum, especially considering all of the whiplash we got with Donald Trump's tariffs in April. Now, looking at the day that was, you could see a fairly volatile day across the board. The equal weighted mid caps and small caps all took it on the chin. However, the Nasdaq, very solid day, and that's just because of the mega caps. The S&P 500 largely flat. We saw a down day internationally as well. Crypto is ripping a bit here. However, we did see Ethereum pull back about 1% on Saturday, up here on Sunday. This is when I'm recording this, as you can see right here. But we'll talk about crypto when we get there. And then volatility was up to the 2-year and 10-year yield up ever so slightly. But, just a bit of reprieve after the move downward we've seen. I mean, the 10-year yield in the last 2 weeks has gone from the 4.2% mark to at some point under the 4% mark. Then we also saw gold rip, silver rip, and then bonds fell as a result. Now the S&P 500 week just closed, and that's another weekly all-time high for the S&P 500. Not quite a daily closing high on Friday, but a weekly all-time closing high. And even on the monthly chart, that's an all-time monthly close, or setting up for an all-time monthly close. But the weekly chart looks really positive here for the S&P 500. All-time highs in the month of September, which is seasonally weak. I think the market looks very strong. Higher highs, higher lows. You love to see it. Looking at the daily chart, very much the same. Higher highs, higher lows into all-time highs, which it did make an intraday all-time high here on Friday, as you can see with this wick. And I don't know what to tell you. The S&P 500, things just look bullish. Things look incredibly bullish for the Nasdaq 100. We are at the top end of the range. This is the core wall. So we can see a little bit of volatility. I am of the opinion that after we get rate cuts with the FOMC, that is going to be a little bit of a sell the news event. But ultimately, even if we do pull back to this 23,000 region, that's a dip buying opportunity for the S&P 500. We can go as low as the 6,300 area, which is quite a bit of a drop, right? You're looking at about a 3% move. That would still be a buying opportunity. In fact, I think everything is a buying opportunity for the S&P 500 up until the 5,700 area. That's where things can get a little bit dicey. But if we pull back, the S&P 500, the Nasdaq 100, buy those dips. When we look at the Russell 2000, that's a 52-week high for the Russell 2000. The RSP, that's an all-time high we hit on Thursday. When we look at the mid-cap indices, 52-week highs as well. Extremely positive stuff, as you can see right here, guys. Just through and through, the markets are absolutely rallying, hitting new highs, and you love to see that. And things aren't even looking that overheated. Look at the AA sentiment survey, right? Sentiment isn't even euphoric yet, and this is certainly a most hated rally, as Tom Lee has said. Let's look at some of our international indices. When we actually looking at the stocks 600, the S&P 500 of Europe, you can see we're approaching this key resistance. If we do go ahead, break out, hit these highs, we can actually see 560, 570 in the SXXP. Looking at the ISRA ETF, we're finding resistance at this top end range right here. But I think if we do go ahead and break out onward and upward, maybe even looking for the 55 region in the ISRA, the KWEB indice just continues to move higher. We are breaking high. And I do think this is probably where you sort of want to get in on a pullback and just ride the China wave. Still a cheap index trading at like something like 11 times forward earnings. Now let's actually go ahead, quickly talk about Ethereum, and then we'll talk about Bitcoin. Now Ethereum right here, if we actually just go ahead and move this back, this is an all-time high for Ethereum. This is the all-time high for Ethereum right here. You can see that I said for the past week, as long as we're above the 4,000 region, this is the buying opportunity. I said to buy right here. And had you done so, you'd be up, quite significantly 3 or 400 points. And I think ultimately, after the big move we saw on Friday, we're going to see a little bit of consolidation, and then we're going to see a move up to the 5,000 level, then the 6,000 level, and then we'll continue to move from there. So you want to be bullish Ethereum. I'm already in. I've been bullish on Ethereum for quite a number of months. And I do think we certainly go higher because there's a ton of pent-up demand for Ethereum assets. And we do know that what's driving the momentum in Ethereum right now is Wall Street adoption. Looking at Bitcoin, very similar situation. We're bouncing off the 109 area. And I do think Bitcoin is going to slow and steadily make its way back to all-time highs. We also do know that M2 money supply is telling us that the top end of the range could be 150 to 140,000, somewhere around there. So it's still plenty of upside for Bitcoin and all of these crypto assets. Let's quickly look at the 10-year yield at the 4% mark. We did see a little bit of a move up, but I do think this continues to move lower. I think we should see 3.8% or somewhere around there, 3.7% before the year is done. Clearly in a downtrend, as you guys can see, and sort of this downtrend somewhat accelerating now, I guess. Yeah, you could call it that, but we're very clearly in a downtrend here in the 10-year yield. The 2-year yield at 3.5%. So, the market's saying we're looking for about 100 basis points worth of rate cuts for this rate cutting cycle. We'll see if that changes as after the FOMC, maybe this even goes to 3.2. We'll see how things go. And then looking at gold really, really quickly, guys. The gold, it just continues to break out. We are digesting a little bit of the move at the top end, as you can see right here. But any pullbacks in gold, we just want to buy those dips. We do know that rate cuts are extremely bullish for gold and inflation hedges. And that is also stuff like crypto and stocks for the most part. So guys, we are clearly in a risk on environment. Any dips we do get in this market, buy those dips. Guys, then diving into sentiment, this is the AAI sentiment survey. Now, guys, despite the stock market hitting new all-time highs this week and rate cuts appearing very likely, almost certain, AAI sentiment remains surprisingly bearish, with nearly 50% of respondents expecting a decline in the S&P 500 over the next 6 months. Bullish sentiment dropped to 28%, well below the historical average of 33%, which is a contrarian signal. This persistent pessimism amid strong market performance is going to set the stage for continued upside as sideline investors are forced to chase the momentum. And the truth of the matter is that momentum can become abundantly clear, especially during rate cuts. In fact, after the start of a cutting cycle, we generally tend to see about a 9.6% average return 12 months later, fueled by multiple expansion as rate cuts are accretive to margins. And then we normally see earnings growth of about 3.5%. But we do know that earnings are set to grow for the S&P 500 over the next 12 months, especially in the 493, very close to the 10% mark. So you could see massive upside numbers. So you could see massive upside to these numbers in totality. And when we look at the macro, right, margins tend to decline before recessions, which is not what we're seeing right now. S&P 500 profit margins sitting at about 12.8%, and that is expected to continue to rise. However, it's not all guns and roses. There is a couple of concerning things. One of them is the premium paid for switching jobs is at 5-year lows. And while pay is rising faster than it used to, the pay premium for switching jobs, the difference in pay growth for job stayers and job changes, has actually shrunk. The return for switching jobs was about 2.6% in August and has been below 3% for the past 2 years. So very interesting right there. Just more cracks in the job market that rate cuts will solve. And then something else that was really, really interesting. In 1999, guys, the median age of an IPO was 5 years. In 2022, that was 8 years, and now it has moved to 14 years currently. So companies are staying private for longer, and that's just because they have access to capital. But as we get more IPOs, we had the Gemini IPO, we had the Figure IPO, CoreWeave IPO, Figma IPO as well. We had Webull IPO. As we get more IPOs this year, this is really going to drive the capital markets forward, and rate cuts are really going to allow these companies to bring their companies to the public market. Looking at data for the rest of the week, look, it's a very light week of data, but there is some high impact data. Retail sales, we're looking for a 0.3, a figure right there, or 0.4. So we get retail sales on Tuesday. And Wednesday, we get building permits and housing starts. And then ultimately, what we're looking at is the FOMC. So we also get the economic projections as well as the rate decision. So right now, the current interest rate is 4.5. The market is expecting a 25 basis point rate cut right there to take the Fed funds to 4.25%. We also get the press conference. Jerome Powell will be speaking, so it's going to be a very big day on on Wednesday. And then when we look at earnings for the rest of the week, we have General Mills on Wednesday and then FedEx and Lennar on Thursday. That's pretty much it, guys. But if you've made it up until here, thank you so much for watching. If you like this video, please subscribe, hit that notification bell, as well as the like button, and leave a comment for the algorithm. Cheers.